First, we have Abdullah Al-Shaksy, the CEO and co-founder of Phaze Ventures in Oman, who's with us today. We've got Nawaf Mohamed Alkoheji, the CEO of Tenmou. We have Riyad Abou Jaoudeh from the Middle East Venture Partners here in Bahrain, based out of Dubai. And we have Trey Goede from Innovation Investment Director of Saudi Aramco here with us. So thanks for joining us today.
Thank you. Thank you.
So today we just want to talk about how, hear from the venture capitalists on what is the new digital age of the Middle East and the GCC, and then what business industries we're looking to invest in, and what is the future of the VC in the region. So to kick it off, the first question I want to pose is, are there certain new verticals that are very interesting in the Middle East, and what is of particular interest to yourselves?
Shall I start?
Yeah, sure.
So at MEVP, we're a private-based VC venture tech fund. We are investing only in technology companies across the region. Across the years, we've seen some evolution in terms of sectors. And we've started with e-commerce and content, and then moved to others like streaming, marketplaces. What are the new trends now we're seeing is obviously a lot of blockchain startups, although nothing, in my opinion, has materialized on a MENA level. Another area is groceries. We have just announced an investment in Saudi Arabia in online groceries. It's a very tricky vertical in e-commerce. However, we're very excited about it. These are two areas we are looking at.
Sure, Nawaf, being from Oman, what are you seeing the trend?
Well, what we're particularly focused on right now is we're super excited about energy and logistics and deep tech for energy and logistics. We have a partnership with Spark Labs, launched an accelerator program that's focused on that. We're partnered with the state-owned energy company there. But then also for that's open globally, and we're looking global, not just for the region. But in the region, we're pretty excited as well about logistics companies, IoT, deep tech. We think it's not very crowded right now, both from the investor side and from the startup side. So
it is very early days.
Yeah, and it's pretty exciting.
Sure.
Yeah.
And Trey, from Saudi Arabia, what are we looking? What is of interest there?
Yeah, so it's definitely tech heavy, and one message that I have today is just congratulations to the ecosystem, because the deal flow has not only increased, but it's gotten better. It's heavy into tech. We're mostly opportunistic, where we're looking for the right management team, a good idea, and 70–80% of the stuff is loosely defined tech that we see. We have not done anything in blockchain yet, but we're seeing those same business plans, and hopefully we'll get there soon. A little bit in IoT, obviously e-commerce and marketplace, and AI. We just haven't seen a ton of deal flow there yet, but we're making progress as a region, and I'm happy with the quality coming through.
I mean, it's interesting. We talk about IoT. Obviously, that's my background. We look at Saudi Aramco as a major oil conglomerate. What is the ability for Industry 4.0, for example, and how is that shaping in Saudi Arabia?
Yeah, it's definitely a push. The suppliers to Aramco, I know Emerson has a big unit, and they're collaborating with Saudi Aramco. And Saudi Aramco itself is also looking at the Industrial Revolution 4.0. As a side job to my investment job, we are teaching a professional certification and innovation class to Aramco employees to tackle just that for IR opportunities.
Sure. Nawaf.
Hey. Basically, in Tenmou, we invest in Bahraini startups, so we're a bit limited to the Bahraini market. But we're sector agnostic, so we're looking at investments in all the fields. However, definitely in tech. Maybe we want to venture in companies or startups that didn't get the funding from other accelerators or other VCs. Hopefully, we are changing our platform this year and our model, and we can reach a bigger audience.
So talking about funding, it's a good segue. Like, what are the challenges that we're facing in the VC world in terms of getting access to new capital to drive into these ecosystems?
Okay.
Yeah, we'll start with you.
Can I? Yeah. Sure. Basically, what we see in Bahrain, because our market is in Bahrain and we're focusing in Bahrain, I think we need more funding for startups. We in Tenmou, we fund seed stage startups. However, we're looking, we see that there is a gap in the market for funding startups in Bahrain. There are gaps in pre-seed, seed, and also in later stages. So funding is an issue. What we're developing in Tenmou is that since there is a gap in funding, we're here to create angels in the market. So we're developing a program with Temkeen, and in this program, it's basically an investors education program, educating family offices and the third generations in the family offices to invest in startups, and then matchmaking them with the startups. So, yeah, we need these family offices and individuals in Bahrain to come and fund startups, and that's where we're at.
Are we seeing change?
We are, definitely, but we need more.
Yeah, we'll go down the line this way.
Let's do
So
that.
I was telling someone over lunch today that 6 years ago it felt almost awkward that the investors had a competitive advantage because there were only a handful of people investing in this region. And having been an entrepreneur before, I didn't feel like that was always fair. Being mindful of people like MEVP, we weren't being egregious with valuations. We generally treated entrepreneurs fairly. But if you look at the reports from the aggregators like Magnet, the amount of investors has quadrupled in the last couple of years, and there's people that I don't even know, investing the same way Phaze is now, and they're a relatively new group. So the awareness is happening. Success breeds success. A couple of exits that we've had have popped more people into this market. Family offices are starting to get involved, but I would agree with Nawaf that we need more. There's not enough.
Sure.
Yeah, I can definitely echo that, especially on the family office note. You're definitely seeing the younger generations, or the second or third generation of these family offices being interested in the space. But there's definitely still the networks and the education that needs to come around it is still not there. We could definitely use as well with some independent, more independent VC firms, non-family office, non-government. That I think we could definitely use that across the GCC. Sure.
Yeah, I think overall in the region there isn't enough money. I mean, I agree that the amount has increased and there's a lot of investors, a lot of activity. There's some corporate VCs, there are some government-backed VCs, government-backed programs, which is great, but we're still nowhere near where we should be in terms of amount of capital in the system, because the opportunity is great across the MENA plus Turkey region, but there isn't just enough capital. We've been fundraising for a year and a half, and we announced a fund recently, and we know how hard it is for venture capitalists like us who've been in the market for 9 years to raise. So I understand, I can only imagine how it is, how hard it is for other venture capitalists and angel networks and to fundraise, which only propagates the issue down to the startups and at the seed level, at the growth level. So I hope that more success come out of the ecosystem, so that money comes into the system so that we can grow. It's,
I mean, it's funny that you mentioned there's not enough money in the region, right?
For
it's pretty
tech.
funny, right? Considering,
For
but I think
VCs.
it's more about getting that money and actually trying to put it to use, right, and put it to work. And
Yeah.
I think that's something that we've done well internationally and generally, is putting capital to work, and I guess changing that educational side and getting people more involved at the family office level and changing their philosophies.
Yeah, money earmarked for technology investments in the region, for startups in Bahrain, Beirut, Dubai, Dammam, all these hubs of business. Unfortunately, the bigger players who have the capital potentially want to diversify away from the region. They want to diversify from certain sectors, geographically, etc. And in the past year and a half, what we've seen in terms of stability factors in the region have further worsened the situation for them, where they would say, okay, actually, you're great, and we understand that there is an opportunity to create technology disruption. However, we prefer to put our money in other markets just from a diversification point of view, and it has nothing to do with you or the technology sector. So
you're not making it personal.
Overall,
Right.
it's a de-risking environment right now. The founder level of the family offices are trying to de-risk, but then the second generation and the third generation are looking for more interesting opportunities for themselves. So you have this interesting dynamic. So they're willing to take risk on angel investments, perhaps, but when it comes to the family office level and the founder level of these family offices, their general investment mandate right now is kind of risk off rather than risk on. But I think as the space matures and as we do have more success stories, it will be seen as slightly less risky. It'll always be more risky than what they're trying to get at, but as we mature, it will de-risk.
Obviously, there are counterexamples like Al-Waha Fund here, who has this vision and who is investing in funds and actually invested in MEVP and other VCs, which is great. We need more of these initiatives, and we're very happy that Bahrain, for example, is leading some of these initiatives. We're creating a fund of funds for technology companies. This is amazing.
This is a really good point. Moving forward is like, I know why I moved back to Bahrain. I moved back a couple of years ago. And I believe there's a lot of opportunity across the region. The question is, as a VC, why Bahrain? Why be present? Is it for the same reason that I came back, essentially, or what is the main reason?
For us, it's very simple. There is capital here. There is a willingness to do business in an efficient way. So it's good for people to start up here. And it's a market that is accessible from Saudi, from Dubai, even from India and Pakistan. So for us, Bahrain is a great launching pad. We've, over the past 3 years, actually, we've seen an increase, an improvement in the quality of the startups we see. Unfortunately, there are some realities on the ground, the size of the market, the availability of talent. However, there are other very positive attributes to that market which help us, which attracts us.
Sounds like the same reason why I wanted to come back.
I think Bahrain is very special in this region due to the fact that, as you said, we're connected to Saudi, the biggest market in the region. However, even operating costs in Bahrain are really reasonable, and the lifestyle and the things that you can do in Bahrain. So maybe what we lack is talent in the market, in terms of tech, in terms of app development. We need more, but definitely Bahrain is a right place to start your business and then grow, because you have access to Saudi, the UAE, and then to the bigger MENA region.
I was talking to a startup, I guess late last week, and they were talking, they have offices in Bahrain and Dubai, and they were talking about shifting more employees and infrastructure to Dubai. And from a budgeting standpoint, they were saying it's a 35% increase.
Right. I've heard it's up to 50% even. Yeah, it depends.
Right. And then coupled with the just progressive thinking here in this country, from a government standpoint, the EDB, they're doing a lot for startups. I said it 6 years ago, and I'll say it again now. There's never been a better time. You never will have any more people available, willing to help you
Right.
with the infrastructure in the region and Bahrain specifically.
So moving on, I'll skip you, right? I'll skip you, Nawaf. But so the question is, like, another question is like, what is the outlook on VC in the next 3 to 5 years?
We believe that we will see more and more capital being invested. I think the numbers by Magnet were in 2018, maybe 700 million was invested in startups, or maybe 600 something. We will see this number grow. I think a few exits that are in the works right now, perhaps Kareem and Uber or others, will really create a lot of excitement for the region. I think people will wake up and say, okay, you know, like, there is a big opportunity in big sectors like logistics, healthcare, retail. This is a big market. When you factor in the entire Arab world plus Turkey and even Pakistan and other, the numbers add up, right? So I think the future is bright for tech in general, and VC is one of the catalyst of this sector. So hopefully we'll make decent returns.
Sure.
Yeah, I think 3 to 5 years, you're already starting to see, actually, not even 3 to 5 years, starting to see these big exits, getting people excited, some large, high-profile family offices getting involved in VC programs, creating a pipeline of really interesting companies. And you put that all together, I think the next 3 to 5 years, you're going to see a lot of excitement. But also, I think you're going to see it mature. You're going to see more VCs start to go sector-specific. People start to really think about deeper tech and not just the kind of marketplace and duplication of models that already exist. Also, I think you're going to start to see people innovating in deeper tech. And it'll be exciting over the next 5 years, I think.
I think even like at Brink, that's kind of where we kind of focus, is looking at IoT and even food coming soon. I think that's really, the future is being experts in these spaces.
Yeah.
Trey?
I agree with Abdullah and Riyad. So the number of players is increasing. The dollar, real, or dinar amount is also increasing. A VC internationally, looks at 3 to 5 to 7 years for their investment, depending on where you're at. And this is still technically, I think, an emerging market. And the data that they have on exits here, it is a little bit on the longer end, 6 to 9 years. But if you look at 3 to 5 years from today, I think those exits are going to catch up, and you're going to see more action like that that's going to pull new money in. So I'm bullish on the market, and the opportunities are big.
Yeah. Nawaf?
I'm going to talk about our experience in Bahrain. Tenmou, 8 years ago, a group of investors, 16 investors, came together and made this fund. And then, alhamdulillah, like months ago, we've partially exited from one of our startups. So we made 20x, and 8 years ago, if you went to these investors and the family offices and asked them, what is your outlook? And they would be like, we want to see how it goes. But now, I think we need to replicate this model and have more angels in Bahrain, have more VCs in Bahrain, the support from the EDB and Temkeen and Bahrain Development Bank and other entities in Bahrain, accelerators or VCs, a part of the Arwaha Fund. So you have a community now. We need to make it bigger. And hopefully by Unbound, maybe 2020, you'll have a bigger and a brighter outlook to the future.
Sure.
Inshallah.
Inshallah, right? You were talking about angel investments. What are the major issues in angel investing in Bahrain or even regionally? And who should be leading the frontier on that? Because obviously it's an area that's kind of missing. There's we've got early stage and there's kind of the in-between that's just not there.
As I told you, it's very nascent. We need more angels. We need more funding to fund these startups. Tenmou can accommodate a few. However, what about the rest? You have accelerators that are graduating 6 or 7 startups every batch, and then what's next? Where are they going? And what about the pre-seed stage or the idea stage startups or founders? Who's giving them funding? So we need support. We need funding for all the stages, and hopefully with the support from the private sector mostly, and then the government sector, people need to understand that the future is this. So. And we have good case studies and success stories that can
I guess
vouch
again
for
we're
these.
really waiting for something to surface, right? We need some good exits. We need some businesses with traction
Yeah.
to drive that, to create awareness, and then drive angel investors out from hiding, essentially, right?
True.
Okay.
Yeah, and I think on the angel side, just gonna echo exactly what he mentioned, and I think building networks across the region, just getting more people educated, more events like this, of course, we will bring people into the community and they get to learn what's happening and get them excited. But then, he raised a good point. You have a lot of these new programs, incubators, accelerators, focusing on, let's say, that seed stage, what happens beyond that. You have a few government funds in each country. We have 1 or 2 major funds, government-backed, or each city has 1 or 2. And that's where we, at Phaze Ventures, we see a really interesting space to come in and, launch a follow-on growth fund right there, and focus on energy and logistics again, double down on that sector and the stuff that we've learned over the last couple of years from that sector, from our partners, working with the government and working with Spark Labs. So that's what we think we can do to bridge that gap on the earlier stage and then on the later stage.
Is this something in Oman also that's being pushed by the government and is being encouraged?
I mean, cross GCC, you got a lot of interesting programs happening, a lot of interesting initiatives by the governments. Each country has their different approach. We have 2 funds in Oman Technology Fund and IDEO, that are looking at this, a number of other programs, incubators, and government-led initiatives. We're kind of like the first private-led initiative in Oman. But we're not just looking at Oman, we're looking regionally, and we're also looking globally. Our focus is more sector-focused rather than geographic-focused. Sure. So yeah, that's what we think we can do to solve those problems.
A bright future.
Yeah.
Riyad.
When we started, like I said, 8-9 years ago, we used to have to even sometimes seed the companies and do like angel investing from the fund, because there wasn't this initial starting up capital. For example, Angami, which is the biggest streaming platform in the region with 30 million, actually 80 million plus downloads, we seeded them at the idea stage as a venture capital fund, which is something we no longer have to do, because thankfully there are angel networks, there are angel investors. In Dubai there's 3, in Beirut a couple, and probably here there's Tenmou, 1. So the good news is there are more and more angel investors. There are people who normal people who want to put $10,000, $20,000, $50,000 dollars in their friend's idea, because they see that this can be done here. It wasn't the case a few years ago. So that's exciting. At the same time, I think for startups, the challenge is to actually find these angel investors and people who believe in that idea and give you the initial money, but also the capital you need when you have an MVP, right?
Yeah.
Because that's very challenging. What we know from as a fund, what we've noticed is that a lot of the startups that graduate from the different accelerators and incubators, there's this valley of death that we call,
Right.
because they go to VCs and like they don't have customers typically, or revenues, or enough users, but they need money. They have a team now. They've committed their time for this. This is the hardest part, and I think hopefully there'll be more and more investors willing to fill that gap. So yeah.
we've got 5 minutes left. I have a couple more questions. So really, a really important one is, what are your thoughts on VCs and management fees and versus performance fees, and your emphasis, and what is the operational model of the future?
So for us, this is a standard model that has been used everywhere. It's been designed and vetted. We do like a 2% management fee and a carry, right? So we share the profit. It's a combination. Unfortunately, the returns will, like was said, the returns won't come until 8 years and 10 years. So you need the capital to manage the fund. And it's typical, and it's used in other private equity other than venture capital. So the future could be crowd investing or ICOs, but for now, I think venture capital will stick around.
It's set, right?
Yeah,
Okay.
at least the model the way it is.
Yeah.
You will see some variations like 2.5% or 3% or less than 2, and maybe more carry. But this is the model that has been working. And
Right, but you don't see
changing.
that management fee disappearing anytime soon.
No,
Right.
I don't see it because frankly, there's a lot of costs that we incur to find deals and invest in deals and support the startups and grow and wait, right? So
Sure.
yeah. Others have.
Yeah, I mean, at the classic 2 and 20, there's on the management fee of 2, there's not that much lower that you can go than 2 before you hit 0.
Right.
But there are interesting things that you can do over there. I mean, you know, we've experimented ourselves on that front, and you know, partnering potentially with CVCs, you know, programs being funded not from, so if you're talking about accelerator funds, or if you're talking about that, maybe having programs that are not directly funded through the investment fund, have them funded through other areas. If you're industry specific, maybe it's a platform for corporates to do R&D or find new technologies, and they may be willing to fund it from that side. So you can innovate a little bit, but obviously, again, at 2% on the management fee, you know, there's not that much room to go down from there, but you can. There's cool stuff you can do, and yeah, then longer term, as you mentioned, then there's some interesting stuff happening where, you know, the country is now looking at making legal like crowdsourcing platforms and other venues for raising capital.
Sure.
Mine's a corporate fund. So
Yeah.
Right, we can skip you then, Trey. It's all right.
But you know, something could disrupt this, but I don't think it's anytime soon.
Right.
Before I came here, you know, we were kind of first-time VC fund looking at true Series A stuff. We got cute with the first fund and went 1.5, 15, and raised 50 million, and then we went to 2 and 20 when we went to the next 100 million. So we broke in a little less, but you know, there's expenses
That have to be
associated
covered,
with it, and if you're a quality VC where the top deals are finding you, there's value in that as well.
Sure. Nawaf?
Basically, our model is very different from the VCs. We're angels. Our fund is a closed fund. However, what we're doing and what we want to work on is to make it to a network where we connect investors and angels with the startups, and then we can be the middle person. So this is what we're looking at, and how can we generate revenue out of that and cover our costs. So maybe we want to be that network-based angel network in Bahrain rather than being a closed fund. So.
Right. I've got to wrap up now. We're pretty much finished for our time slot. I want to thank Nawaf, Trey, Abdullah, and Riyad for joining us and sharing their information. Thanks for your time, and I hope it was insightful. And thank you.
Thank you so much.
Thanks for having us.